If you haven't been living under a rock for the last 20 years, you know who Warren Buffett is. Warren Buffett has two rules to investing. The first one is never lose money. The second one is follow rule number one. Now, if you're an investor like myself, you look at that and you say, that's a bunch of have-hashy. Give me some more information. In this video, I'm gonna prove Warren Buffett wrong, baby, and let you know why you should follow my financial advice over that guy.
I heard they are going to call off the Wall Street Christmas pageant because they couldn't find three wise men. And there's been a real problem there. They couldn't find a virgin either, but that's another problem.
What's up, fam? My name is Bad Anthony, and thank you for tuning in to my YouTube channel. So the guy that I mentioned earlier, yeah, he's kind of a big deal. Mr. Warren Buffett. Mr. Buffett, I want no beef. I want no beef. Now, Mr. Buffett is the third richest person in the entire world. And what's more impressive is that he was a self-made billionaire. So much of a stud that he started investing in stocks at 11 years old. I mean, what the heck were you doing at 11 years old? At 11 years old, I was getting mad at my dad because at Toys R Us we couldn't get the toy I wanted. I mean, you don't know who Warren Buffett is? The Oracle of Omaha?
The Sultan of
The
SWAT.
Sultan of SWAT? The Great Bambino!
Yeah, you keep telling me that. Who is she? What?
Known as the Oracle of Omaha, Warren Buffett is one of the most successful investors of all time. As the third richest man in the entire world, he has a current net worth of $85.7 billion. That is only 10 more dollars than I have. In all seriousness, guys, the guy is 90 years old with all this money, and over the years has accumulated a 20.5% return. Warren Buffett runs Berkshire Hathaway, which owns Dairy Queen, Geico, and Duracell Battery. Warren Buffett is known for introducing the value investing philosophy. He says that investing in companies who show average earnings but long-term growth is the way to go. All in all, guys, he is the man, the head honcho, the big kahuna. He's the guy you want to listen to and you guys want to follow. So guys, I know in the beginning of the video I said Warren Buffett only has two rules. You know what? I did some digging. He has a bunch of rules to investing. So right now, I'm going to name off about 5 different rules that Warren Buffett mentioned before you start investing. The first rule that Warren Buffett has, and he takes it very seriously, he says, go subscribe to my channel. The first rule, as I already mentioned before, never lose money. The primary purpose of investing your money is for it to grow. If you were to lose money, it would be better for you to just go to a casino, go to Las Vegas. Before you start to invest, get this through your head. Investors do not lose money, baby. Only speculators lose money. Speculators are people that gamble with money. They don't follow any rules. They bet money based on their gut feeling. They do not analyze the risk and reward of the game. While investors have done their due diligence, have done their research, they make the rules and they stick to it. The best returns are not always the highest returns, but the best possible return for the lowest risk. And that's the principle of investing. Number 2, get a little bit richer every day. Do something every day to make you a little bit more money. If you have this mindset, every day it puts you in a position to get money that day. I mean, put it on your phone, your screensaver, put it above your bed, put it in the bathroom. Get a little richer every day. Guys, do it. I'm telling you, you're gonna get up and start grinding, start hustling. The third rule of investing is think long term. the stock market is a great way to invest your money because historically has given a better return than any other asset. If your objective is short term, then the stock market is not for you. They're playing roulette down at the MGM casino right now. Why don't you head over there? 90% of traders in the stock market end up losing their money. By just holding your stock for the long term, you can greatly reduce your risk. So Warren Buffett strongly believes that you should find a good, strong company, Coca-Cola, Pfizer, ExxonMobil. These companies are blue chip stocks. These are the companies that you buy and hold. They're not get rich quick stocks. If your investment horizon is less than 2 years, you're better off considering the MGM casino and the Number 4, ignore the noise. Once you become an investor, you're gonna get people talking, people saying things to you. Sell this, sell that. But you know what? Don't let it faze you. Boom! You guys still there? Did you guys know that investing in the stock market makes you part owner of that company? Now, how cool is that? I mean, you are part owner of a company. So now that you're part owner of this company, you have to start thinking like an owner. You cannot wake up every morning looking for reasons to sell your company, right? Your stock price is gonna go up and down over the years, but that doesn't mean the value of the stock is changing. As long as the fundamentals of the company are good, ignore all that. Ignore the stock price going up and down. Price movement in the stock market is gonna happen. You believe in your stock because you did your research. Your stock is strong. So there's no reason to check the stock every day. Trust. If you really believe in that and you believe in that company that you invested in, hold the stock. The 5th rule of investing by Warren Buffett: set aside your emotions. If you want to be a successful investor, you need to master your emotions. Success in the stock market depends more on your emotional tolerance than your intelligence. Think of that. So imagine you just put a bunch of money into a stock and it's going down and it's going down and it's going down. Now the question is, do you sell or do you buy more? Most people who are emotional about their money are gonna be like, man, this is crazy. I'm losing all my money. I'm gonna take it out. I can't do it. And the person that's emotionally immune to the stock market prices, stock market prices is saying, yeah, I want it to go down so I could buy more. Crazy fact. Albert Einstein lost $3 million in the 1929 stock market crash. Sir Isaac Newton also lost $3 million in the South Sea bubble in 1720. Now, these men are some of the smartest and most intelligent men who ever lived. And it makes you think, if intelligence is the only thing you need to succeed in the stock market, then why didn't these men do well? Because your success depends on your emotional control. You need to be patient, man. You need to wait for that hot opportunity and then hit it. You have to exit the stock at the right time. And you have to sit idle when everyone is buying like crazy. Great quote by the man himself. He says, be greedy when others are fearful, but be fearful when others are greedy. In hindsight, that means be your own man, be your own woman. Don't follow the masses. All right, how many is that? 5 or 6? I don't know. I don't got a lot of time here. Okay. You know what? I'll give you guys one more. And the 6th rule of investing by Warren Buffett is start early so you can take advantage of compound interest. Compound interest grows with time. The earlier you start, the better. For example, if you're 20 years old and you just invest $100 a day, By retirement, you'll have $1 million. Meanwhile, for the 40-year-old starting, he has to invest double the amount to get the same as the 21-year-old at retirement. So start early and start now. Time works in your favor. You can start to meet all your financial goals if you start early. Now you're probably asking, how much should I invest? Now the Wall Street rule of thumb says that you should invest 100 minus your age. For example, I'm 37 years old. 100 minus 37 is 63. So 63% of my money should be invested, and 37%, because that's my age, should be in safe assets. A rule I learned today from my stepdad. So all in all, if you start investing early, you don't have to put in that much money because you have time on your side. On the other hand, the older person that starts investing a little later in life has to catch up because retirement is just around the corner. Warren Buffett says, start investing early. In conclusion, guys, investing in the stock market is a great way to invest your money. Investing is very simple. You just have to be very disciplined. You gotta follow the rules of the game. Now, guys, I hope you can achieve financial success with following these rules. I'm doing my best to follow these rules as well. Now that you guys know the rules that I just explained, please, down in the comment section, let me know some of the rules that you live by when you invest. All in all, guys, there are many other ways to invest, but today we just mentioned the stock market, and by no means am I a financial advisor. So invest at your own risk. Thank you guys for tuning in, and I look forward to seeing you in the next video.